Thank you. Good morning, everyone, and welcome to this today's seminar entitled AnaCredit and the SMEs Financing Scoreboard, the Luxembourg experience by Cesare Rio from Statec Research, Sasha Gobo from the Banque Centrale de Luxembourg with Maria Camila Jimenez from the OECD. This study explores the integration of AnaCredit and an analytical credit dataset into the OECD Scoreboard to enhance the monitoring and evaluation of small and medium-sized enterprise financing. The analysis showed that AnaCredit provides two major improvements over ERS data. It identified SMEs based on firm size rather than loan size and active lending from euro area financial institutions, offering a broader perspective. There will be time for questions at the end of the seminar. If you are in person, you can ask them orally at the end. And for those online, you can either type them in the chat or ask them orally as well. Have a nice seminar.
Thank you, Benjamin. You all have been here. Thank you, Camila. We will organize first. Camila is responsible of the publication of the OECD Scoreboard, and she will present as the first, the most recent results of the reports, and I will allow her to share the screen. Your slides.
Sure. Let me share my screen.
Yes. If you want, I can shoot yours.
However you prefer. I don't know if right now you see my screen or not.
Not really. Online?
Not yet.
We can see it. Yes.
Okay, so perfect.
It says it's sharing. Maybe now.
If you see online.
No, I think I'm having problems. Maybe if you can share it for me, that would be great.
Okay, I share for you. Okay.
Okay, I will let you know to pass the slides. So, well, thank you so much for inviting me to this seminar to present the latest findings of the SME Financing Scoreboard, which is a flagship publication of the OECD. Next slide, please.
Well.
Okay, so perfect. Just to mention a little bit about the publication. We collect indicators from around 50 countries. We provide comparable data on debt, credit cost, credit conditions, asset-based finance, equity financing, and also we collect data from enterprise distress indicators, looking at bankruptcies, late payments, and non-performing loans. We are trying to improve the coverage of the scoreboard every year. Actually, Croatia just joined the exercise. And for just briefly to mention that we are in integrating the latest data points from some of the countries. So just to let you know that right now the coverage that I will present is findings include data from 42 countries. This information, basically on this data collection, we will present data up to 2023 for most countries, but it is of course complemented with survey data, demand side and supply side survey data, with data up until the third quarter of 2024. So next slide, please.
Ezra, did you see that somebody said that they can't see the slides on WebEx?
How is this? By now? Now? It's now working?
No, I don't see the slides on the.
I just connect to WebEx with your laptop.
No, because it's making the echo.
Let me see.
Let's show from beginning. Do you see now online?
We see them, but I mean, we don't see them. We don't see them online. We just see the video of the.
We see,
of the
yeah,
room.
we see it on the screen, but not on.
Yeah.
And now? No. Non plus.
Just connect to WebEx.
No, it's like you're not sharing the screen. We see it from the camera, from the video.
Click there.
This meeting is being recorded and
Clear the sound.
Okay.
Yes, now.
One said okay now. You have to
We saw them briefly, but
Check.
now we're not seeing them.
screen one, then full screen.
It's not going.
Okay. You see your screen now? Good. We see your presentation, Stefan. Not mine. Maybe let's try.
Find the presentation.
Now?
And swap.
Okay. We see them now.
Are we better now?
Yeah, but we see it like in presentation mode. So as you as presenter, so maybe just put display settings and just show it as presenter because we see him. Or yeah, like that.
Now?
Perfect. We see them now. So it will be just to turn the slide to the. Yeah, perfect. Next slide, that one. Thank you so much. Thank you. And thank you for flagging that that you cannot see it online. So maybe let me just continue. So I will just briefly set the scene with some of the macroeconomic trends that we have seen. As you will know, I mean, GDP growth in 2023 remained resilient and stood at 3.1%. However, this rate was weaker than expected due to the impacts of monetary policy tightening in 2022. And in particular, investment and consumer spending were constrained, which explained the underperformance. SMEs, in most cases, were the most affected. In Europe, for example, inflation-adjusted added value declined in every size class, but in particular, SMEs were hit significantly larger, had the higher impact compared to large firms. 1.6% decline in SMEs compared to 1.1 decline in large enterprises of inflation-adjusted added value. In 2024, inflation has moderated and interest rates began to ease in many economies. However, there is still, some, I mean, GDP still has not, the outlook is still a little bit positive with 2025 projections slightly stronger, so 3.2%. And we will see how this will develop, in the medium to long term. Next slide, please. So let me turn now into the lending conditions. So as I was mentioning, inflation began to moderate in many economies. but the effects of monetary policy tightening was felt for most part of 2023. As you see in the figure, transmission of monetary policy tightening to bank lending rates increased through most of 2023 and reached its peak in October 2023. In early 2024, bank lending rates to firms and deposits declined slightly, signaling that the transmission of monetary policy tightening was complete, as you'll see here in the figure of the slide. Next slide, please. So now let me just mention, here is the SME interest rates. The latest data collection from the Scoreboard point out to a strong tightening of the financial conditions. In 2023, interest rates rose almost in every country that provided data for these indicators. You will see there were just a few exceptions, which are at the right of the figure, but as you see, the decline in rates in these countries is very small, and the trend is really, you know, a large increase. The median SME interest rate, so the Scoreboard median of the countries that I am showing here, passed from 4.4% in 2022 to 6.04% in 2023. And actually, demand and supply side survey data confirmed this strong tightening. For instance, the SAFE survey showed that 8 out of 10 SMEs report high interest rates, which was not seen in the 11 years since the survey started. This, I am talking about the wave on the first half of 2023. In 2024, we see, however, that fewer SMEs reported deterioration of conditions, which mirrors the trend that I was showing in the previous slide. I have to mention, though, that the increase in interest rates were also seen in large corporates, and in most cases, even higher in most countries, even higher increases in large corporates compared to SMEs. Which meant that the interest rate spread declined in some countries. Next slide, please. Now, the increase in SME interest rate had an effect on the demand and the supply of credit. In the previous edition of Scoreboard, we mentioned that from the escalating costs of finance acted as a deterrent for many SMEs to apply to credit, and we saw that actually application rates in 2022 declined. In 2023, we observed that the indicator of application rates remained relatively similar. However, we saw that from the supply side, there was a little bit of a contraction. So we saw rejection rates increasing slightly in 2023, as you will see in the graph, very slightly. But this may suggest that the reduction in the supply, that the reduction in the credit for SMEs was explained mostly from a supply side contraction than a demand side contraction, which happened in 2022. We believe that this may be explained by banks opting to reduce the volume of credit supply to small firms and not only increasing the lending rates, and these may be to safeguard their balance sheets against, potential deterioration of borrower payment capacity. We saw this reflected also from supply side survey data from the UK and the EU. However, we saw differences in the US. We saw that the tightening via reduction of credit supply was milder, and survey data suggested that approval rates were relatively stable between 2022 and 2023. In 2024, central bank key interest rates began to stabilize, as we know. However, in the third quarter of 2024, inflation continued to be above target in some economies, and central banks remain prudent still. In the US, however, despite the banks reporting higher standards, loan demand remained unchanged. Next slide, please. Now, against this context, against this backdrop of higher interest rates in 2023, what we saw is that the new SME lending declined across the board. The figure there shows the median for selected group of countries, upper middle income, EU, and non-EU high income. And the decline was much more significant in 2023 compared to 2022. The decline of the scoreboard median was 6.4% versus 2.2% in 2022. In contrast to 2022, all country groups experienced the same negative trend, and the most significant decline was seen in Europe, 10% decline, followed by upper middle income countries, which declined by 8%, and in non-EU high income countries by 3.9%. In upper middle income countries, we saw that this was a reverse in the trend seen last year. We saw that Latin American countries actually increased in 2022, but we saw that, given the high interest rates, but also the devaluations of the currency, we saw the decline, the flow of lending to SMEs have declined there, considering that there's the share, the percentage of SME lending in foreign currency is significant. So that mainly explains the large decline in 2023 in these countries. Next slide, please. Now, the decline in the flow of loans in 2023 and actually also in 2022 naturally affected the outstanding stock of SME loans, which also exhibit a more significant decline in 2023 compared to 2022. In the figure, you'll see the stock of SME loans as a percentage of GDP by country. 27 out of 33 countries registered a decline in the stock of loans, with the blue bars being below the blue diamonds in most countries. The countries that registered the sharpest declines have also seen a decline in the loan maturity of new loans. So we believe that explains in part the decline in the stock of loans, the fact that more new loans that are being requested are with short-term lending. And this is indicative of SMEs growing need to finance immediate expenses rather than long-term investments. And this is something also that policymakers should focus on. We saw that this was the case mainly in Spain and Portugal, because we found survey data particularly explaining this, but we see that this is mostly a trend, the decline in the loan maturities. Next slide. Now, alternative sources of finance also declined. As I was mentioning, we also collect data from alternative sources of finance. And in 2023, one particular thing that we saw was that all instruments declined. So in asset-based finance, factoring and leasing hire purchases declined. So in 2023, 12 out of 19 countries declined the volume of leasing and hire purchases. In the case of factoring, was 16 out of 29 that declined activities. And looking at equity finance, we also saw an important decline in 2023. Here the slide shows the volumes of VC as a share of GDP, and you will see that almost all countries have lower volumes. So the blue bars beneath the blue diamonds, almost all countries except the 4 countries in the right. Now, in particular, important to mention here is the decline in the US. The US passed from 0.7% to 0.2% as a share of GDP. And we see that this trend, of course, have been, seen in 2022. but it's a contrast. In 2021, we saw that the increase of venture capital was significant, and we believe that most of this decline is an adjustment of the very marked growth in 2021. We saw that in particular, late stage finance was the one that declined the most. Looking by stages, late stage finance was the one that declined the most. And we saw that this was the stage that had the most increase in 2021. So we believe here is much more like an adjustment of what we saw in 2021, of this large increase. Now, something that I would like to mention is that projections show a more positive outlook for the industry and venture capital. We saw survey data from the EIF mentioning fund managers' expectations in valuations, and we see that there is some positive outlook also in the fundraising environment, which we believe will be seen next year, when we hope to see some increases in these indicator. Next slide, please. Now, against this backdrop of tight financial conditions, a decline in most of the financing instruments available to SMEs, we see that non-performing loans, in general, enterprise distress indicators, see these, were impacted by these developments. In the case of debt, in the case of non-performing loans, we saw that it increased in some countries, and this is a reverse in the long-term trend seen in the last 10 years, with the exception of 2020. 14 countries registered an increase in non-performing loans, up from 8 countries in 2022. The worsening of credit conditions for SMEs in 2023 might have directly contributed to SMEs finding more difficult to service their debt. And this situation is mainly seen in the countries with a high share of SME loans with variable interest rates, which means that SMEs took loans at a much lower rate, and particularly long-term loans, and then saw in 2022 and in 2023 a strong tightening, and these led up to many SMEs facing difficulties in servicing their debt. Next slide, please. Now, I would like to mention in the case of bankruptcies also registered an increase in most countries. 20 out of 27 registered an increase in this indicator. We mentioned last year, in the last edition of the Scoreboard, we mentioned that this was in part an adjustment of the low bankruptcy rates that we saw just after COVID-19. But however, we believe that now, looking at survey data from Europe, we see that the percentage of financially vulnerable SMEs have increased in 2023 to the levels actually seen in COVID-19 in the first quarter of 2020. The percentage of in 2023, the level seen in COVID, and in first quarter, the percentage of financial vulnerable SMEs remain high. In the first quarter of 2024, the share of SMEs that present financial difficulties continue to be. However, there are several factors that influence this indicator. In some countries, we've seen that there have been changes in the bankruptcy rates. So in the case of Germany, for example, we saw that there were changes in the insolvency laws, and we need to take this into consideration, that these changes, when they become more easy, or more easy to apply, or easy to do the whole process, then the bankruptcies increase. But this doesn't mean that they're very affected, just means a change in the bankruptcy procedure. So we need to take this into consideration as well. Next slide, please. Now, just to mention maybe a short, and this is my final slide, a short review of what we have seen in the latest trends on policies. We saw short-term and long-term challenges and policies responding to these challenges. We saw government guarantees being strengthened to help SMEs, you know, in this moment of tighter credit conditions. We saw examples of, you know, new guarantee schemes or expansion of guarantee schemes in Hungary, in Italy. In the case in Italy, we saw that some sectors have benefited the most, such as the manufacturing sector. And we also saw that there was an increased role of government in also protecting some vulnerable segments of SMEs, including women-owned enterprises, but also firms in underserved regions. In the case of underserved regions and in the case of equity finance, for example, we have seen emerging, I mean, it's a long-term trend, literally long-term trend, but we have seen that this has accelerated, which is um, investing in venture capital, in regional venture capital funds. So we see these regional equity funds in the UK, Germany, France, to address regional differences in access to equity financing. And something that we also saw that was very interesting is also an increasing effort from governments to allocate equity funding into strategic sectors. So we saw increasing investment in specific funds focusing on green tech, on deep tech, which was not seen before. These, you know, choosing these strategic sectors, it was before more sector agnostic, much more general, and we see now that it's more specific. And we also see that there has been a larger participation of venture capital in general. So here in the next edition that will be published, you know, the findings that I'm presenting that will be published in the first quarter of 2025, we saw that government participation in venture capital to promote investments have increased. So commitments have increased. Of course, we understand that commitments doesn't mean actually equity capital deployed, but we believe that commitments from government have increased, in particular considering the decline of equity financing in the last 2 years and the role of governments of maybe signaling to investors, you know, that providing positive signaling to investors to really maybe accelerate a little bit the growth of this industry. So these were the trends that we saw, and I think that that's the end. So thank you very much for your attention, and happy to answer any question.
Thank you, Camila. You see how many indicators are in this scoreboard. There are so many indicators focusing on explaining and studying what is the financing of SMEs. Why SMEs? Because SMEs are really the backbones of the economies. In Luxembourg, companies with less than 250 employees are the great majority, 90+%, and they represent more than 60%, 2/3 roughly, of added value and employment. So the financing of SMEs is key for the economic development. The goal of the presentation of Camila was to give a sense how many indicators that allows to compare the evolution of financial market in Luxembourg with other OECD countries, and not only. And behind this exercise, there is a lot of work, a lot of data collection. This is exactly what we are going now to present. The example of the exercise of AnaCredit. Can you see? And this is which is the basic source of this, which is the raw data, where they are coming from. And this work is was conducted by me and Sasha Golbo, the colleague from Central Bank, Banque Centrale du Luxembourg. And here the goal will be to go deep into the source of the data and see how data can help us to trace the evolution of SMEs financing. So this is a pilot study, and why this is the case is because the figures presented were using the old methodology, and we are going now to present the old and the new methodologies, how they change in some indicators, and in order to collect as well your feedback and sense of these changes. I will show how AnaCredit data. AnaCredit stands for Anagraphique de Crédit.
Analytical credit data set.
Voilà, thank you. And this will inform the new waves of the scoreboard. And the goal will be to compare of this presentation the AnaCredit and the data from interest rate statistic, ERS for short. The current data source for Luxembourg is the ERS. All the figures presented before were drawn from the interest rate statistics. That is a statistics mainly for monetary purpose. And they basically look at how banks charge or pay loans. They pay loans on deposit. And this is the usual source of information. But there are some limitations of this data source. First of all is the definition of SMEs that is based on the loan size, because we define loans to SMEs or loans that are below 1 million euros and not on the firm side who is receiving the loans. The other major limitation is in terms of geographical origins, because before we were using information about Luxembourgish bank offering loans to SMEs in the Eurozone. And what I wanted to explain in the future, in the next slide. Here, basically, you have the residents of the lending financial institution, basically banks, but not only, can be Luxembourgish or Eurozone. At the same time, it's important to look at the residents of the receiver of the loans. That can be Luxembourgish or from Eurozone. And here we saw that the ERS looks at Luxembourg and the Euro area, at least the data that I was using before, while we are interested more to know the resident, to see the amount of money that flows to SMEs in Luxembourg. This is exactly what AnaCredit is aiming to achieve. AnaCredit overview, I leave it to the, voila.
Okay, so AnaCredit exists since 2018, and it's a rather new granular data collection. It is related to a lot of problems because of the granularity. It means analytical credit data set, where we are since September 2018, we collect on loan level basis loans given by banks in Luxembourg and also by the branches of Luxembourgish banks. And on each loan, we collect one or two variables, which you can see on the next slide. Basically, we are collecting on the left side the instrument data, which is the most important information on loans, like the interest rate, the reset date of the interest rate when it's a variable loan, the purpose of the loan, and so on. Also, we collect accounting data, if it's still performing, if it's recognized on the balance sheet, and so on. Then we collect data on the protection, which is collateralizing the instrument. So if you buy a house, the simplest example, if you buy a house, the bank gets the mortgage as the security. So that's the protection of the loan. And then we also collect the counterparty reference data, which is all data related to the debtor, the creditor, the servicer, and the originator if the loans are sold to another bank. As it's a granular data which holds one or two variables, banks do a lot of mistakes, and they use old databases which are not always up to date, where sometimes they use for the interest rate statistics, they use one database, and for AnaCredit they created something new, and when we match the two, there are so many mistakes that we have to correct both sides. This means that we have, if everything goes well, we have 540 submissions. We have 540 submissions for the Luxembourg population. But if we look at the average per reference period, we have around 1,090 resubmissions. So every bank at least submits 2 times their reports to us until we get a good quality for our end users. Per month, we collect around 45,000 debtors in AnaCredit. We have 115,000 instruments provided by Luxembourgish banks, and they are protected by 172,000 protections. When we look up the data from 2018 to June 2022, we see that we are working with big data. If we want to analyze the data, we have to use machine learning tools because you cannot read every observation with 1 or 2 variables to see if everything is reported correctly. The problem in AnaCredit is you have so many variables which are working interactively, so that you can't put a validation rule on all those to find all the errors. This is why we are working a lot with the end users, which tell us, okay, the interest rates of 50%, it should be an outlier, and so on. So we adapt our validation rules to spot those errors. Yeah, put everything on.
Yep. So put back.
No more.
No?
So the main advantage in AnaCredit is really the granularity, where you have so many variables to define if it's a performing loan, non-performing loan, if it's recognized on the balance sheet, if you can basically say everything you need to know on the credit. There's nothing you don't really know. The only thing which we don't know for the SME study is the gender of the company, which is for us not really relevant. Like for us, it's relevant that it's the company which takes the loan, if it's in Europe or outside of Europe. So yeah, we have access to the ECB database, where we have all the AnaCredit data also from other central banks collected. So any company in Luxembourg, we know exactly how many loans they have. If they took a loan from Germany or France or Luxembourg, we know everything. For the SME identification, we collect the number of employees, the financial data, the balance sheet, and the turnover. And with this data, you can define exactly if it's an SME or not, which was not the case with the interest rates before. Furthermore, yeah, we collect economic activity, and yeah, we collect data from everywhere.
Information, yeah. We already no.
No, go back. One back. Okay, the main limitations in AnaCredit, in order to not put too much effort to banks, we have put a limit of below 25,000. So below 25,000, the loans don't have to be reported, because normally those are small companies which it's difficult to get data from, because banks cannot waste too much time on small companies to collect the data during KYC. But we looked, we are comparing AnaCredit to the balance sheet item statistics at ECB, and we collect around 99.5%. So all those loans below 25,000 only make 0.5% of the total loans, where we think we have a good enough coverage. We have data from 2018 onwards, but the data in the beginning was not really good because it was new to all the banks, and we needed to get all our checks into place, and this took a bit of time. So from 2021 onwards, we have good data which can be used for statistics and can soon replace the old reports of the Central Bank of Luxembourg. As said, yeah, we now have no gender, and it's not publicly available. That's the largest problem in AnaCredit. No researcher is allowed to use the data. Just through the central bank, you can get aggregates, which you can then use in your publications.
And this is exactly the case of our publication. Sasha was conducting the analysis, and we were focusing among so many indicators. We were looking at the new loans to SMEs. And we are analyzing two main features. First, the cross-border lending. So we are looking at, we are trying to account for the residence of the bank and the receivers, the SMEs. And we are able to implement completely the Eurostat SMEs definition, not only the number of employees, but as well turnover and the balance sheet, in order to capture the true SMEs. Some technical details. Quarterly data were annually aggregated in order to have the annual dimension that's required from the scoreboard. Fiduciary and intercompany loans are excluded to prevent double counting, and we excluded as well the missing observation that around 4.7% of all the sample. So what is the results of this exercise? This looks complicated, but stay with me. The Luxembourg SMEs received roughly 13 billions of new business loans. That means loans that are the new contracts that are closed, all in all in 2023. That represents 77% of these loans were coming from banks that were based in Luxembourg, but that means that 23% are coming from banks based abroad. So we are documenting an important cross-border lending activity that takes place in that is important for the SMEs in Luxembourg. At the same time, so we see that Luxembourg banks provided 32 million of new loans to Euro area SMEs. It's not really surprising, knowing how important is the financial hub in Luxembourg. But that represents 75% of the total SMEs loans that are the banks running. At the first, I was a bit surprised about this study, and I was happy to figure out that the recent work of ECB of July 2024 documents the total cross-border activity in all Eurozone, accounting for around 14% of all loans. So that means that somehow our data match the general trend. It's not only Luxembourg, but it's more general as well taking place. But in Luxembourg, it's more accentuated. Now we look at the amount of the new lendings by firm size and loan size. How bad was, how is this? Now we have the proper SMEs definition, and I want to compare with the size of the loans to see which figures are appearing. Here is on the left, you have, we observe that 30% of all new loans are going to SMEs. And this accounts, that's roughly 13 billion, about over 46 billion of total. That represents 69% of new loans from SMEs are above $1 million. That makes sense, considering that if you buy a new truck, a new implants, 1 million euros is not so much if you are financing a capital investment. So it's not surprising that SMEs are taking loans above 1 million euros. What may, at the same time, we observe that 43% of new loans for large firms are above 1 million. This was a bit more difficult to reconcile. Possible is because large companies may access other financing instruments than bank loans, and this is one possible explanation, because that means that this is quite important. But this is one. This is what the data shows. Looking now at the interest rate at which these loans are taken, because the cost of the loans are important. They are important to the fine investment decision of SMEs, and we will distinguish again among firm size and the loan size. And here we observe that the cost of financing is higher for SMEs regardless of the loan size. So SMEs pays on average more than large SMEs for their loans. The interest rate, the average interest rate for 2023 for SMEs was around 6.13% compared to 4.1% of large SMEs. So there is a considerable gap that may hinder the development of SMEs. Large loans cost approximately 1 percentage point less than small loans. I have only 10 minutes. I would like to go fast because I want to present the rest and take some questions, if any. So Now I'm comparing how the new indicators based on AnaCredit compares with the ERS, the old database that used it. And we observe that there is a huge difference. AnaCredit reports 13 billions of euros, while ERS for the same year reports just 3 billions. There's a huge difference if we take information from one data source or the other one, and if we apply the correct definition of SMEs and loans. And over time, we can see as well how this is an impact over time. And we say, on this side, we see the percentage of total new lendings. The blue line is the ERS, and the yellow line is the AnaCredit. And we observe 30% compared to 12% in 2023. So, and this is more close. I want to emphasize that the dotted line, the 27%, is the median percentage of new SMEs loans in the OECD countries. So we observe that the AnaCredit place Luxembourg above the median of the OECD, while the ERS place below. Looking at the interest rate paid, same before, we observe that AnaCredit reports higher interest rate paid compared to the ERS for 2023, and the same applies when looking over time. The figure is the same. The blue line is the Luxembourgish ERS, the yellow is the AnaCredit, and we observe that the gap, the spread between large and SMEs, it's higher when using the right indicator. And this is closer to the other one. So I want to sum up the main takeaway. AnaCredit is much better enhanced accuracy of monitoring SMEs financing. Has many advantages because we can use the right definition of SMEs and of loans. But there are some challenges associated. First of all, introducing AnaCredit creates a major break in the series. So we will be not able to compare before and after anymore. Emphasize the critical role of accessing the data and the quality of the data that we're using for our reporting. We observed that this presentation was done as well in the OECD informal meeting of SMEs in September, and that Germany, the Bundesbank, was presenting the similar exercise conducted with AnaCredit in Germany. And we emphasized the discussion was calling for a common guidelines in order to assure comparability across country and over time using this huge data set. And calls probably a centralized data processing from the OECD. That's something that's conducted because all this analysis is conducted ad hoc from Sasha for the purpose of the OECD SMEs financing exercise. Thank you. Sorry if we are a bit later than expected, but it was important for me to bring different voices all together on the same tables, giving an overview of how rich the data are there, how rich the data are, and how important it is to look at the details of the data generation and the data production and definition. Thank you. Any questions?
I have a quick question clarifying. I think I misunderstood the beginning. Is this going to go into the new OECD, or this? You said this is a pilot study, so the current scoreboard is based on the previous. So will this go anywhere? Where will this go? And related, is Eurostat? You said Bundesbank is using this. Is anybody else using it?
First question. This is a pilot study. We did the comparison because of this, to be aware what it was going to be. There will be a working paper, hopefully to be published as EcoStat, in order to open the discussion about how to proceed further. My personal view is that we should implement the new data set. Bundesbank is the only one using this data AnaCredit for the time being. They use it for the current data collection 2023. We plan to use it for the next year onwards. and probably revised up to 2021. No, for the time being, to the best of my knowledge, Camilla can correct me if I'm wrong, only Germany and Luxembourg are using AnaCredit, but there was a huge interest from other member states delegates in order to, especially the Netherlands and other Eurozone delegates, to learn more and to use this data set, AnaCredit methods. This exercise is yearly repeated since 2009, so this will probably inform next OECD scoreboard. Thank you.
Yes, just to complement very quickly, Germany didn't provide the data before. Actually, last year was the first year that they started to provide data. Before they were just providing policy information, and they start using AnaCredit to report on the scoreboard indicators. They managed, I understand that AnaCredit started some years ago, and they started to report up from 2019. So not the huge data series that we normally have. We have actually data from countries from 2007. They started provided from 2019, but with the granularity, with the potential of having those granularities that Cesar just mentioned.
Well, I'd just like to add, if the StatSec wants to access AnaCredit, perhaps they should go via the European institution which StatSec reports to. Is it to OECD? Or who StatSec reports to at the European level? Is there no?
Coordinated by Eurostat.
Well, Eurostat.
We don't report to.
Okay. Well, then you could perhaps ask via Eurostat to have access to AnaCredit, because I saw now CSSF. The CSSF has also access to AnaCredit via the supervision part of the European institutions. So if you are interested in AnaCredit, you could ask the access via Eurostat.
A quick clarification. One is concerned the AnaCredit data. I might have missed it during the presentation, but basically what you collect is data on the whole population of transactions. It's not a survey. So
No,
you basically collect information from it, complete data.
For every legal entity.
And the second point is, I understand the big advantage that this data bring to the table so that you can correctly track the origin and the destination of some of these financing methods. But when you use this at the aggregate level, let's say at the OECD level, don't you risk to do double counting? Because the import of a financing instrument in Luxembourg is equivalent to the export of the same instrument from the sending country.
No, during our calculations, we exclude transferred amounts. So any loan which is transferred to, I don't know, to Germany would be excluded in Luxembourg. So in Germany, it would be counted to the bank which received the loan. And intra-company loans anyway, we exclude, so it's no double counting included. Basically, we take all the steps that any country can do the analysis while not doing any double counting.
Thank you.
Any question from the chat?
For the moment.
Perfect.
We ask for the recording of the presentation and the slide, and we will publish this in the website after the seminar.
I have an idea. So right now, basically, I imagine it's quite obvious that you're going to get a difference between the AnaCredit results and the previous ones, because it's based on an assumption. And what you have now is a way to maybe adjust the assumption about the size of the loan. So what you could do is to try to reduce the gaps between the estimate from the AnaCredit. So say, for example, the interest rate that is observed for SMEs using AnaCredit, and the interest rate that is observed using the previous. But then you can change the assumption on the loan size, because the SMEs are defined based on loan sizes of above 1 million. Is that right? Mm-hmm. And that's an assumption. And you could change that assumption perhaps to see if you can get a better match.
Changing when you use the IRS to see
Yeah.
if you can match. Okay.
Well, there's a bit of problem because the IRS, for which I'm also responsible, is collected at the aggregated level already from the banks. So the bank reports to us 0 to 1 million, 1 million to, I don't know, whatever aggregate is there. You don't have granular data to, well, you could do a percentage calculation and guess it, but
Okay, so there's not much you can do.
there's no granular data, it's aggregated data.
Yeah, maybe just to add there that one important thing that we look at is the SME definition, right? And the SME definition tends to be at the European level when looking at loan size at the threshold that Cesar mentioned. If we change that threshold, we're changing the definition of SME. So for one country will be different, and then it won't be entirely comparable. And what we want is basically to have that the same entity that we're studying, which is the SME, across countries. In the case of Germany, they also use the same threshold using the SME definition at the EU level. So this is something actually that we are advocating at the OECD to try, because in the EU level the definition is standard. This is not the case on other countries, and what we advocate is to have a preferred SME definition, and other countries to try to go towards that definition. So then the scoreboard would be much more comparable.
Good. So we are 2 minutes late than scheduled, even though we had some technical problem at the beginning. If there are no more comments or questions, we might close here the session, and thank you all for your attention to be here. Thank you.
Thank you.
Thank you.
Thank you, Camila.
I've got a meeting coming up. I'm sorry if I'm not.